Are you an ETH guy, BTC,
I
Solana?
am more Ether than anything else.
All right, I've got a friend for once. Someone
Justin's
else on the
happy.
show, yeah.
Justin's happy.
I'll
Wait,
say it's also like really like it sucked the last year or two being an
It's
Ether.
been terrible, but that's when you know it's good, right? Like
wait,
this, you don't want to buy when everyone's euphoric. You want to buy when there's blood.
wait,
Buy
Jody,
when there's
don't
blood.
you have ETH too, or did that change?
Listen, like, of course I have math, right? Like, my math bag is never going away. I'm never selling math.
We
We're
lost
gonna have
one.
to wait a little bit. We're gonna have to wait a little bit. Um,
There's more
and
than just the
so.
ETF. There's other reasons to
We
like the
lost the
coin.
soldier today.
Welcome to Steady Labs, everybody. I'm Jordy, the founder of Selene Capital. As usual, we have Justin, CEO of Astaria, with us. We have Thicky. Glad to have you here, Thicky, my quant adopted son slash quant father, depending on which YouTube comment you check. And instead of our humble farmer, this week we have the grandfather of farming instead. So we've upgraded. We have Robert Leshner. How are you, Robert?
GM everybody.
Well, we were talking in the pre-show. You were saying that you're not taking credit for yield farming as a concept, even though compound obviously was a large part of that DeFi summer kickoff. I think it would be amazing to kind of look back into what happened in that really exciting days when I remember like reading tweets about DeFi. I didn't even know if you pronounce it DeFi or DeFi because nobody it was just written down like nobody knew. Do you feel nostalgic about those days, or like when you look back, how do you feel?
Oh, I feel totally nostalgic for those days. I mean, you know, the whole DeFi summer where we sort of saw Compound and then we saw Yearn and we saw Curve and we saw Sushi and we saw like a bunch of other projects all launch at the same time, each one trying something radically different and like putting their own flavor on DeFi summer was just a really special time. And in a lot of ways, I feel like right now in like 2024, we're like starting to see that again, where we're seeing these like really interesting new launches of tokens through farming or user based activity or however you want to frame it again that are really exciting. And I almost think that like we like are in this moment that feels a lot like 2020, here in March of 24.
I mean, for the poker players among us, I know Thicky dabbles in the cards and Taiju's not here, but it reminds me that 2020 was like the 2003 moneymaker days where people were just like randomly guessing, like it was just intuition. Does this make sense? New token, vampire attack, like what a pool two tokens worth? Nobody knew.
Pool two, yeah.
The pool too. I think right now, like this cycle, we're maybe like 2010, 2014 poker, where some people have done some research, they figured out like there's some training, but we're not at the AI GTO kind of like level. There's still like incredible inefficiencies as long as you're willing to put in the work. Do you feel that's sort of a good analogy?
Yes, I do. I think, people forget that even in that like 2020 era, there still was like some level of professionalization of this. Like, you know, FTX and Alameda were like aggressively farming things at like industrial scale with like quants doing all the numbers. There was like tools for individuals like VFAT and stuff that like calculated all of the, deep, calculations that like most people wouldn't want a spreadsheet on their own. Like there were like very sophisticated actors, like even in 2020, you know, and I don't think it was like total gut driven. I think for a lot of users, it was just like gut driven, like, oh, this is awesome. Like, like I'm not going to run any math at all. But like even then, there was like some real deep math happening.
You would look at the APY number, and the APY number would just like assume certain price of a pool two token, and just tell you like, yeah, you're getting 400%. Like, click,
Right. But there was like, I mean, I personally remember like I had friends who were building pretty sophisticated models, which basically had like token emission schedules and decay and like DEX liquidity and like APY projections by the hour and like all of these things. So as like new projects launched, Like there was this like squad of people that were like had a leg up where they were like, okay, like I'm going to move my capital, which is limited from, sushi to basis cash to, whatever the next one was to like, yams to like, because they were all occurring at the same time. And so like you basically had to have this like understanding in real time of like, what did everything yield?
I wanted to ask you about this, Robert, because I was in all of those farms as well, but this was when I was just getting onboarded into crypto in early 2020. And at the time, I didn't have the cynicism I have today where I was, like in something like Basis Cash, and I was like farming it with the understanding that maybe this could actually work. And I'm still haven't gotten to the bottom of like, was I the the guy you were dumping on, or did everyone have that optimism? So like, as someone on the inside, did you have that optimism, or were you cynical about it?
No, I was also overly optimistic. Like this is going to sound ridiculous and you can make fun of me all you want. I actually thought that yams could have been a global currency. And I was really excited about it. I was like, oh, this is like a fair launch, currency, just like Bitcoin was. Like, what if,
Well, now I feel so much better because like if you didn't know, then I can't be mad at myself for not knowing.
Yeah, and when you look back in hindsight, you're like, oh my God, like how could anyone think that yams were going to be like an actual currency?
But even this cycle, I mean, we're seeing Solana meme coins use the same argument, like, oh, why wouldn't this be the next BTC? It's the same thing as BTC. Tiki, have you been buying any Solana meme coin?
I haven't, but I wanted to ask Robert if he's like what his thoughts are on like. I think back, I wasn't around in 2020, but I felt like there was a lot more optimism on like the technical capabilities of like what we were building compared to now where it feels more cynical. I'm curious if you have any thoughts on that.
Yeah, I mean, especially when it comes to meme coins, I think the whole thing is much more cynical. It's not about technology at all. There's not even like, no one's even pretending like there's an innovation here. It's, one icon of a token symbol is a little bit cuter or a little bit sillier or like more offensive than some other one, therefore it should create value. It's like, it's a pretty ridiculous concept. And, I definitely think that is a totally different, I'm not going to say irrational because in a lot of ways it is rational, but like, it's a totally different way of thinking about like, what is an asset in general? When you really zoom out, pretty much any asset like Bitcoin, like any of these, there's a social consensus that creates its value. Right? There's a lot more justification for the social consensus around Bitcoin as like why Bitcoin is special or valuable or whatever. But at the end of the day, most assets are based on social consensus, whether it's using like seashells as a currency or like whether it's Bitcoin or whether it's like a fiat currency or whether it's Bonk or whether it's, SHIB. And I think that's like the one sort of like lining of truth to it that gives it value is like, well, everything's made up. Like, what separates, Book of Meme from Bitcoin from fiat, and it goes to like the original arguments of crypto in general, which is like, oh, it's all made up, therefore this one's even better. It's disappointing to me because like, it ignores everything else that makes even something like Bitcoin or like fiat or like whatever valuable. And it just focuses on the like, why not this? With no other arguments. It's like with no other like positive attributes at all besides like, oh, I have an offensive cartoon character. And so like I definitely think like the whole thing is tongue in cheek. I don't think that like this has staying power. I think in the moment, people are having a lot of fun and a lot of short-term value gets created in the same way that like everyone can bet on GameStop at the same time and drive GameStop up and everyone cheers and says like, hooray, like, we're good investors because like we all bought the same asset at the same time, but that doesn't create any staying power. It doesn't create long-term value. It is a Schelling point. And if everyone agrees to buy the same, slightly offensive meme coin, then everybody wins.
Well, it's not everybody wins. Like it's like everybody like prints like a high P&L number temporarily, which, unwinds as soon as like people try to make it real dollars. And that's sort of like where the thing kicks in.
Yeah, Robert, I wanted to ask you sort of building on Thiki's question a bit. So when we started this show about 35 weeks ago, this is the 35th episode, we were just coming out of the bear market, but it wasn't clear yet. And Taiki and I were incorrectly theorizing that to sort of bring us out of a bear market, we needed to see new applications that brought users on and added utility. And in some ways, like going back to our convo about 2020, like it seems like we've done the reverse. Like in 2020, 2021, we had things that had a seed or like inkling of utility, but didn't really pan out. Now it seems like we've reverted where we're not even going to pretend like we have good apps. We're just going to bet on coins and meme coins, etc. Like, how does that make you feel? Are you seeing projects that are exciting you beyond just like new meme coin of the week on Solana?
Yeah, absolutely. So I think like, this is like where there's a chasm between retail or new people coming into crypto today and the people that are working in the space full time and like investing in this space. Like, yes, if you're coming into the space right now, like the shiniest object is going to be meme coins on Solana. And like, you're not going to take the time to learn about anything else because other things aren't going from zero market cap to $700 million market cap in 12 hours. Like only in the meme coin land can things go from zero to $700 million based on absolutely nothing for a project that's like hours old. And that is the shiniest object. But just because there's that incredibly shiny object that honestly is pretty vaporous doesn't mean there's not exciting things happening in like the real tech world or like the real tech that like will create more actual long-term value, right? And there's like still tons of stuff, tons of teams that are focused on like actual like creating value, making innovations, releasing new L1s, new L2s, new applications, new everything that are being ignored, which is okay because like markets are long-term weighing machines between value and valueless. And like, it just means that there's, it's going to be a slower, more lucrative win for the projects that are actually like building things that are important.
I mean, the reminder in this kind of meme coin season is that the speculation game, the casino game is so huge. I remember like years ago looking at the Vegas versus Macau versus, all the different gambling revenues yearly. And it's all, Singapore's 15 billion and Macau's 15. It's all like around that area, like 15 billion. And you look at what's potentially like the best casino right now, betting on like random coins. And you look at the market cap of these things, and it kind of falls in line into what you would expect for the global demand for, this type of gambling. And what Solana has shown is that right now, in the current status, it has the best casino ground floor for those games to exist. So one's the wallet, MetaMask versus Phantom, like maybe it's just a smoother experience for this specific use case. I'm not saying it's better overall, just like for this use case. Maybe like the DEXs, Uniswap versus whatever Jupiter or I guess there's like a Orca and Radium, whatever is. I'm not too much like into these things to know exactly, but is it sort of like a weighing machine saying like right now in this point in time, this is just like the smoothest casino?
Right now, the Solana casino, besides like some intermittent like block delays and some weird issues around like everyone like having transactions revert because they're out of slippage bounds and all this stuff, like it is the smoothest user experience right now, especially for retail. Like in general, and Ethereum L2s, this is like rapidly improving when it comes to transaction costs, and you might actually start to see this like inversion between where is like degenerate demand, like it's back to L2s, but like right now it's on Solana as the focal hub of activity because transactions are pretty dang cheap and pretty fast generally. And for retail, it's like, yes, if you're coming in with $100, which honestly I've seen so many screenshots on Twitter now of people who like are like, oh, I got a Phantom wallet yesterday, I put $100 in, and like here's my portfolio of memes. Like you need a blockchain that A has low transaction costs and B has like all this garbage that you might want to buy. And that's on Solana right now. Like people are taking $100 portfolios, spending 2 cents a click, buying 10 different tokens and seeing what happens. And like, you can't do that on Ethereum L1, right? Like it's like $15 transaction costs. Like it's not that much if you're trying to like move $1 million, and there's $1 million of DEX liquidity on Ethereum if you want to buy or sell Ether or like a major or something large. But like if you have $100 portfolio, you cannot spend $15. And so, yes, Solana right now is the best casino. You see it in the volumes, you see it in the activity. Solana DEXs are printing crazy volume figures right now. Like clearly that's the focal hub of activity. And that might change like with like Denkun upgrade and like blobs, like Ethereum L2s are getting really cheap again. And like maybe we'll see more activity migrate to any of the L2s. But right now, Solana, clear winner.
I'm at DOS this week, so I'm in London, and one of the key questions we were discussing around the panels and such is like, where the hell are we in the cycle? It's so confusing because in some ways, like the Solana stuff, it's so toppy. Like you have this Slurf coin, people just sent the guy $10 million, and he doesn't even know what he's doing. He burns the supply. Like this is like such a top signal, but at the same time, I'm talking to the institutional side and the hedge funds, and they're seeing like these inflows into BTC just starting. Like this is not the end. Like it's gonna just pick up because a lot of it's still under approval, and we're gonna see like 18 months potentially of like ramp up. Do you guys have any sense? Like, Thicky, what do you think? Are we in this like new type of paradigm where we're gonna have a lot of like mini cycles and I don't want to say the word super cycle, but like, are we just gonna have like overheating and then underheating constantly, or are we just gonna go into a bear market?
Yeah, I think like the Bitcoin and like separately ETH and then altcoins each have like their own sort of cycles. A lot of it's due to like people that have Bitcoin like selling it to buy alts whenever Bitcoin does go up, and maybe the reverse happens when they want to take profit of their alts and go back into Bitcoin. So like yeah, right now we're in like a spot where we just cooled off from a really large sort of meme coin slash alt. One could say blow off top, and it looks like we're still trying to find our footing on whether we want to like resume up on Bitcoin or we're just going to chop here for a bit. It's like quite unclear.
My personal view is, the number one driver of like this current bull market and like whether we're toppy or not, like, I think it's relatively objectively understood that the Bitcoin ETF's success has been probably the biggest macro driver of this cycle recently since January. I mean, the flows into the Bitcoin ETF surprised me, surprised almost every analyst. Like the numbers were incredibly, incredibly impressive. And, market commentary of like who's investing in these ETFs, when you start to like talk to people, everyone that's looking at the numbers believes that it's retail driven. It's not like, pension funds buying Bitcoin ETFs. It's like retail that honestly probably found Coinbase too hard buying Bitcoin because now like they can just do it through the accounts they already have. They don't have to sign up for something new. They trust it. Buying an ETF on Charles Schwab is like much more palatable for some people than like signing up for Coinbase, right?
And Larry Fink was telling us about this, right? Like he was going on, he was saying like our clients are requesting this. Like this is coming, this is reverse solicitation. Like they're coming to us asking for this.
Right. They don't want to sign up for some crypto thing and deal with crypto wallets and like things they don't understand. It's like use the account you already have, press buy. It's great. And so like the ETF sort of thing I'm watching most closely right now in terms of like trying to assess where are we in this cycle. And as of Thursday, March 21st, I don't know if your show comes out same day or later, but like as of this second, I'm actually really concerned about where we're at in the cycle because we're starting to see ETF inflows dramatically slow. There's been 3 days of outflows on an aggregate basis, including Grayscale, which Grayscale is a dying product and all this, and it's dragging the numbers down. The inflows into the ETFs have been really anemic the last couple of days. In the aggregate, there's net outflows. And if the net inflows into the ETFs and the success of the product was what built up this current cycle, if you start to see outflows from these products and you start to see like cooling demand for them, it's potentially a really big narrative headwind, but as well as an actual technical flow headwind to the cycle. And so, I'm a little bit concerned that there's 3 days now of consecutive outflows. If this trend continues, I would, probably view it as just like a temporary end to this cycle and a holding pattern for some time. I'd want to be very cautious.
So do you view this sort of four-year cycle theory as something that might be coming to an end? Because what you're suggesting, if that holds true, would be different, right? Like it would actually be different this time. We'd be deviating from past 4-year cycles.
Yeah, I think crypto is so narrative driven. I think, we're on 4-year cycles because historically, Bitcoin halvings just seem to align. And it's been like, of the people that are like invested in trading, like it's like the dominant narrative. But, I think the average buyer at this point doesn't even know what a halving is and like isn't paying attention to it. And like the importance of like Twitter driven laser eye narrative is like going to zero. And I think the influence of like traditional narratives is ending. And so, yeah, like I think we are starting to deviate from what used to be a narrative structure to one that doesn't exist anymore.
We're not seeing like much talk about Bitcoin halving, even though we're just weeks away, right? Like it's so soon and it's not being talked about. I do think that it's the last halvening where we do still have like an impactful reduction in supply. It will be like meaningfully different. This like 2 to 1% is still like a lot of billions. But Justin and Thicky were discussing last episode, got a little bit contentious on the ETH ETF. We can talk a little bit about how things are looking. How are they looking, Justin?
Yeah, I should probably kick off that conversation. I suppose I need to go on an apology tour and tell my critics that I was take off the medal and tell them they were probably right. So obviously the news came out that the SEC was investigating the Ethereum Foundation, seeing if ETH could be classified as a security. And I think for most people, this sort of puts the ETH ETF off the table. I think the only caveat to that is if the SEC is not investigating in, let's say, a nefarious way, the Ethereum Foundation, but they're investigating to sort of make the case that it's not a security. To be clear, I think that's like a very low probability outcome. I think they're very much going after trying to see if they can classify this as security and reject the ETF. And so now I think my odds are much more aligned with the market. So I think even as recently as last podcast before this news came out, I said, Larry Fink's in, BlackRock's in. I think this is like an 80 to 90% chance of approval. Now I think I'm as aligned with anyone else, with Polymarket being at 20%. The one thing that I think is interesting, and I definitely want to pass back to Thicky to get his thoughts on this, but the worst news for Ethereum could have happened. Like the best tailwind we had going for it is now a headwind. And ETH BTC was actually up on the day. It looks like ETH BTC was sort of sold into a week before. Maybe there's insiders, with knowledge selling ETH there. But for me, it's hard not to be bullish on ETH just because you can't, the ETF's not priced in, right? No one's bullish on that happening right now. And there's this regulatory overhang, and ETH is still where it's at. It's at the same price. It's actually up on ETH BTC over the last 2 days since that came out. So very curious to hear what you have to say, Thicky, and if you agree with me, and then also Robert as well.
My personal take on why BTC went down so much after it hit 4K was, in my opinion, it wasn't like insiders front running it or people putting on the ETH BTC short. Like personally, like I felt like I knew that like it would get rejected at 4K when it was at like 1058, but like I just didn't want to put on the short. It just wasn't good risk reward. I honestly think that's what like the lack of demand looks like. Not to like offend any of your bags, but I felt like at a certain point, like if an ETH ETF isn't getting approved, like there isn't much demand to buy ETH at 4K and wait 2 years for an ETF potentially. And I think the recent bounce off the SEC FUD, like I think that was mostly due to like a technical bounce off like that defended 0.05 level. Like I think everyone knew that FUD was like kind of old. It was like from like a Fortune article that references the case like a month or two ago.
I think it just kind of like it's the opposite of sell the news. It was like a buy the bad news, which is this exact effect you expect when people are pricing it at zero, but nobody has publicly said it. And it's like I was actually uncomfortable holding ETH like the last couple of weeks because it looked like it was going to get rejected, but until the news comes out, you can't like get that out of your system. There's too many people. They're like very comfortable selling rallies because they know that they'll get bailed out by this like ETF rejection. Now that it's already started to get priced in, those people don't have anything to lean on anymore. Like forward looking now, like the rejection is not on the horizon. I see Robert nodding.
Zooming out, the only reason why we have Bitcoin ETFs is because the SEC got its ass handed to it in a court case over their arbitrary and capricious denial of the Bitcoin ETFs. And this is not something that they wanted to approve. the Bitcoin ETFs were being rejected for like obviously political biases. And they had to be dragged kicking and screaming into the approval of the Bitcoin ETFs. I don't think that there's a desire to go out and approve Ethereum ETFs. I think if it happens, they're going to be dragged kicking and screaming into their approval through the next set of court cases that, slam the SEC for their arbitrary and capricious, actions. I don't think they want to do this. And I think they're looking for excuses. This is, personal speculation, but I don't think they want to approve these ETFs. I think their attitude hasn't changed since the Bitcoin ETFs, and I don't think they wanted to approve the Bitcoin ETFs. And so, they were forced to. They were literally compelled by a court to do it.
The chatter at DOS has been that they're expecting that what's needed is first of all, everyone is expecting Trump to win. That's kind of like I think the odds are only 50 something percent, but over here it was foregone conclusion. Just wait till November. Trump is obviously in, Gensler's out, and then then we can get moving in Q1. Is that something that is the base case at this point?
Well, if the prediction markets have it as a 50-50, then the base case is that it's a coin flip on what the outcome of the presidential election is, right? I definitely don't think either president winning is a foregone conclusion. I think it's probably going to be the most competitive presidential election in a really long time. I mean, 2020 was an unbelievably competitive election. 2016 was an unbelievably competitive election. I think both of those were razor's edge outcomes. I think this year will probably also be a razor's edge outcome. And I don't know, who's going to win, but I think if there is a turnover in the administration, then the odds of Ethereum ETFs goes to close to 100. If there's not, I think it's still close to 100, but it's close to 100 because they get dragged kicking and screaming into approval.
Robert, I wanted to ask you something you mentioned earlier, that the SEC doesn't want to do this, but I've really put myself in their shoes and really tried to think about this, and the incentives are aligned for literally everyone to approve the ETH ETF, even for Gary Gensler to approve it. It's why do you think that's not happening? It's hard for me to imagine that the conspiracy theories are true, that Elizabeth Warren controls Gary Gensler, has influence there, and that she's actually made the calculation that somehow it would actually be good for her or good for the Democrats politically to reject this. But to be honest, I think it's kind of a nothing burger if they approve it. I don't see Democrats protesting the BTC ETF. I don't see anyone upset about that. I just see everyone doing really well, everyone making money, everyone enjoying this product, the SEC getting a little credibility back, it helping their chances of getting jobs after their terms are done at the SEC. The incentives are there to approve this thing. Why isn't it going to happen?
I mean, you can say that, but I'll agree just based on the facts. There was 10 years of ETF applications, right? That they sandbagged, a decade of them sandbagging a Bitcoin ETF, right? Clearly the incentives were not there, or that there was a hesitance or a reluctance, because they spent a decade sandbagging this before a judge had to intervene to say, hey, this is crazy. You need to approve this. They like to say that they're not a merits-based regulator, but even in 2 out of 5 commissioners' dissents, they 100% were arguing against it on the merits of Bitcoin as an investment, right? There's clearly a level of abandonment of the principles of what they're supposed to be doing, because they're trying to make merit-based decisions on what people should or should not be investing in. And I just think all of the evidence points to this.
Yeah, maybe that's a good way to transition to chatting about Superstate and what you're doing over there. So BlackRock, I think yesterday or the day before, they're the torchbearer of the industry, has now launched their BIDL fund. I think they've seeded it with $100 million of test capital. It's an on-chain treasury product. From my understanding, that's what you're working on now. And it seems like it's going to become a very crowded space. We've got a lot of people bringing treasuries on chain. Can you talk just a little bit about what your North Star is, where you think Superstate will be in the next few years, and what you really want to bring on chain?
Yeah, well, I think, there's an opportunity for a lot of different asset managers to compete in this market and win. If you look at, the level of competition and assets in, traditional markets, BlackRock sits alongside Vanguard, sits alongside Fidelity, there's many huge asset managers that all share a market together. right? So, and that are all incredibly competitive, that are all also incredibly successful. So I don't think that there's necessarily going to be a situation where even in the tokenization of assets on Ethereum, there's going to be a winner take all market. I don't think BlackRock is going to be left alone with no competition to tokenize assets. So, I'm coming at this from the perspective of there's a lot of opportunity to build new products and a lot of opportunity to go about it in different ways. And there's a lot of differences in approach that I think we're going to start to see.
Yeah, I'm curious what assets you're most interested and excited about tokenizing, because treasuries do seem like the most obvious next step. But one thing I've been continuously asking myself as I look at the RWA space is like, is there product market fit for 5% on chain? To some degree, yes, because, Jordy brought this up many, many episodes ago. Like, we're democratizing and opening up this yield for anyone globally, right? Whereas before it's very much restricted to US peoples, corporations, etc. But at the same time, right now, people that are actually doing things on chain are generally degen, or at least would be considered degen relative to TradFi folks. So, like, do you think there's product market fit there? And then what do you think, what products do you want to bring on chain beyond treasuries?
Yeah, it's a great question. So I think there's definitely the potential for a lot of product market fit, because there's a lot of product market fit for dollars that go up 0%. And so, just logically and intuitively, there's probably more demand for dollars that go up 5% than dollars that go up 0%. The hurdle is that they're not as easy to use as stablecoins today, right? There's a lot of reasons for that, but like right now, any of the tokenized treasury stuff is harder to access and harder to use than stablecoins. And so stablecoins have an advantage. You can see it in the $150 billion of stablecoins, market cap to the 700 million of tokenized treasuries. But I think over time, as these get easier to use, easier to access, and more composable with other systems, then they'll surpass stablecoins. I think in terms of other products, there's a lot of things that are really exciting. I think eventually, equities are going to be on chain. I think eventually, real estate will be on chain. I just think it's like a long journey to get there. I'm excited about the NASDAQ. It's a little bit old school, but like, I think that's an exciting, index of tech companies. And I think there's products like that that are going to be the next sort of like focal points of tokenization.
Gotcha. And then do you think, like, is TradFi coming to crypto, or is crypto going to TradFi? And what I mean by that is, like, of course, there's a world where both Superstate and BlackRock succeed and other crypto native companies. But in your mind, do you think like these traditional issuers are the ones that dominate? They bring their users on chain, or we bring TradFi and, international folks on chain with our DeFi native or crypto native products?
It's both. It's a giant sandbox and melting pot. And like crypto people are going to try going to TradFi, and TradFi people are going to try to bring it to crypto. Like, I think the one thing like we have to expect is that like there's going to be way more teams trying way more things, and it's going to get like experimental and messy and fun.
Yeah,
feels like in the bear market, like these types of products were very popular. Like it made a lot of sense to go after them because the governance tokens were all going to zero, and like anything that's a high single digit in some way look good. Now that these governance tokens are spiking, like are you've been there obviously with Compound, you understand like the added boost of being able to give people that, and Ethena, despite having a huge yield on the underlying, they're also giving shards or there's extra stuff. Do you kind of like feel like without a governance token you can do something that gets the attention and gets the TVL, or is it really hard to compete?
Well, it depends on who you're thinking about as like the investor, right? So, there's really like a couple different approaches. One is like you try to create, an asset that has, a good, however you define this, risk-adjusted return, right? And there's so many products out there. There's so many teams. There's so many yields and yield farms. Like there's so much competition on, the risky return. There's some competition on getting closer to the risk-free rate, but not even that much. And the amount of demand for like the true risk-free rate is actually huge. In some ways, it's probably larger than the demand for, at least on chain, like risky assets. And so I think the other sort of like direction to approach this from is like getting closer to the risk-free rate. How do you get there with even less fees and like more liquidity and like get closer to the true risk-free rate? Because that is also something that people want to hold. And, at the end of the day, if you've studied financial engineering, if you have a risk-free rate and like a frontier of returns, you can create anything you want. You can compose, the true risk-free rate plus a theta or plus, eigenlayer or plus whatever. And it gets really interesting. But like the building block of like, hey, this is a risk-free rate that you can use as leverage or, inverse leverage, like is really cool and like becomes a very important primitive.
Robert, I wanted to ask you, I saw you had retweeted this. Here's a picture of you with a bunch of dapper looking folks speaking to the UK Economic Secretary to the Treasury. It looks like a very thoughtful and productive meeting, but most of our audience is not privy to these sort of like insider conversations. Can you just share a little bit about, to the extent that you can, like what these conversations look like, what different states and governments are thinking about?
Yeah. So, I mean, in terms of this meeting in general, the UK and in this case, this economic minister of the UK, Bim Mafalami, they're incredibly excited about creating opportunities to bring crypto companies to their country and turning their country into a hub of innovation and entrepreneurship and opportunity, taking an incredibly different approach to the US, which in a lot of ways is doing everything in its power to exile the crypto companies and the crypto builders and the crypto founders. And it's a smart bet. This is what most countries around the world are doing as like a counterweight to the US, trying to basically make conditions here as hard as possible. And, in a conversation like that, it's really about, asking questions of like, well, from a country asking questions, well, how can we make this a hospitable climate for entrepreneurs, for venture capitalists, and for investors? And it's just like a very different perspective, which is a government trying to create a really fertile ground for people to work in. And it's awesome to see, at a meeting like that in particular, like just the like difference of attitude between like UK politicians and US politicians is just wonderful to see.
Let's talk a little bit about robot ventures, maybe. So we're at this point in the cycle where you're a bit worried about the slowing ETF flows. We don't know if we're topping for a little bit and stuff. Like, are you finding that investments are still making sense, or are the kind of seed round? I was doing a 70 million pre-seed round the other day, and I was being told that this is a great opportunity. So, like, what are you seeing right now?
Well,
not kidding.
Yeah, I know you're not. I mean, that's where we're at again. I mean, in the 2001 sort of like market top, like, seed rounds and pre-seed rounds were getting into like the hundreds of millions of dollars, right? And that's because the public market comps were like, oh, as soon as this goes liquid, it's $5 billion, therefore invest it. 300 million for a week old project, it makes sense. And in some ways, like the math does make sense if there's like, a discount rate to public market valuations, right? In the bear market, valuations got really low. I mean, there was strong founders, raising at far below 70, 15, 20, 30. And like that was the norm. And valuations are back in an upswing. They're nowhere near the 2021 top at all, nowhere close to that. But they are starting to get a little bit detached from reality because there's still frothy liquid markets. And like for a lot of investors, it's just like a discount rate math calculation where you're like, all right, well, what are things trading at liquid? How many months until something's liquid? What's my like return and risk appetite? Like, okay, like, just find a comp and like discount it. And so valuations are creeping back up. 70 seems pretty on par right now.
Yeah, I mean, you're seeing, like you said, such demand for new launches. I mean, I don't think he's tracking new launches quite closely, but we're always like, okay, this exchange automatically assume, like if it's going to go on OKX, for example, like there's like this level that you expect and everything below that looks cheap. It doesn't matter what the coin is, what it does. If it's like an OKX launch or if it's a Binance launch, Binance has raised the bar even further. Um, and it actually like consistently seems to be working. It shows that the distribution that these centralized exchanges have, if you manage to get that centralized exchange distribution, it gets its a waiting game. Like, do you vest that fast? And then we're seeing, secondaries go on sale right away because somebody just made a 6x 1 month in. No, sorry, they've made a 20, 30x, but they're willing to take a 6x. And that creates this like secondary transaction where someone like is like, okay, 1 month, 6x, I'm good. And then the next guy's like, okay, 70% discount, let me buy this, and then like, figure out what to do with it.
Yeah, I mean, it's funny because like you don't really see like secondary markets in like early stage unlaunched projects unless you're like really at like the top of a cycle, to be honest. Like, you know, during 2021, during 2017, it's like the times where things were like out of control is when like I would see like a lot of secondary market activity like this. Um, so it's definitely a yellow flag for investors in the project, for everyone involved. Like when you start to see, private market stuff like getting flipped for 6x in a month. Like,
Robert, do you I mean, you've talked a little bit about all these caution flags, possibly this cycle we're a lot further along than we think. Do you actually act on this information, or are you at the point where you have your ETH, BTC, whatever it may be, and you're just holding that as that's what you're benchmarking against?
Yeah, I'm very boring personally. I'm an investor, through Robot Ventures. I'm an investor in a number of other venture funds in the space. In general, like I'm not a trader. Like I'm kind of like a hodl type guy.
Are you an ETH guy, BTC?
I am more Ether than anything else.
All right, I've got a friend for once. Someone else on the show, yeah.
I'll say it's also like really like it sucked the last year or two being.
It's been terrible, but that's when it's good, right? Like this, you don't want to buy when everyone's euphoric. You want to buy when there's blood.
Wait, Jody, don't you have ETH too, or did that change?
Listen, like of course I have meth, right? Like my meth bag is never going away. I'm never selling meth. So the reality is like tactically around the ETF,
We
we're
lost
gonna
him.
have to wait a little bit. We're gonna have to wait a little bit.
There's more
And
than just the
so
ETF. There's other reasons to like
We
the
lost the
coin.
soldier today.
the good thing is like, once you stake your ETH and it's sort of like earning yield, you feel much more comfortable just letting it like marinate over there, and you're just like, okay, it's doing something. I feel psychologically okay with doing this, especially if it's, you can use it as collateral or anything else. Do I expect like the ETH BTC generational pump that I predicted to happen right now? I think it's gonna have to wait until the ETF hype begins again. That's really like the only thing that's gonna, make it moon.
I agree. I think the thing to be cautious about, and I say this as somebody who's, an Ether. I don't want to say maxi, but
You could say it. We
No,
won't
no,
judge.
I'm not a maxi. As a builder,
Say
as a builder, I have focused my building on the Ethereum ecosystem. I don't know if Ether has 10x upside, right? Like most crypto assets that you're investing in, period, full stop, you like think that there's at least 10x upside. I actually think Bitcoin does have 10x upside from here. I think there's a plausible path to it. I think Ethereum is like an absolutely unbelievable computing platform / database. And I think it's hard to justify like a $4 trillion database. I think the narrative around Bitcoin as like a currency or a store of value means it has more sort of unbounded upside. Where could I see it being a $13 trillion market cap? Yes, I actually can. I think it's hard to see Ether have 10x upside from here. I think one of the reasons why I love the private markets is most private market stuff has 10x upside. Like, of course, has 100x upside, depending on like, what stage you're investing.
I actually agree with that argument, but it's interesting that me and you both basically agree with that, but our actions are not in line with that. Like we both hold more ETH than anything else. So why do you think that is for you?
There's quite a good downside protection, right, for ETH, because if it falls 50%, it becomes like so cheap for what it is and the amount of community it has. Like we saw this like on the dip yesterday on the ETF, bad news, and then people are just buying the hell out of it under like, once it gets like around 3,000. So the downside is very limited. Maybe that's why.
Yeah, I mean, like, I think, yeah, like in some ways, I think of it as like the world's best stablecoin, where like, it's super useful. There's like so much you can do with it on chain. Like, you like meth, great. Like, there's so many flavors of Ether, like liquid staking stuff, and like Eigenlayer, and like all these things to like do with it that, like, in my mind, like emotionally, it's like the best stablecoin.
That's actually, it's interesting that you say that, Robert, because like in my mind, like if like our new person coming in and people explain to me like proof of stake versus proof of work and explain to me ETH versus Bitcoin, like I would assume that like ETH would be the better store value asset than Bitcoin. But I guess you don't see that as like a short term or, like a path.
I think if you were to like ask someone at like a sovereign wealth fund or like, in TradFi, like the fact that Ethereum has so many use cases and can do so much, like it's much more just like, oh, that's a computing platform. Like, oh, it hosts, 7,000 different apps and like so many different tokens. Like, okay, like it's a platform. So like, let's look at it in terms of like, what are the economics of that platform, right? And like, yeah, it's amazing. Like, it burns $2 billion a year. Therefore, like put some multiple on it. Like, hooray. Like, but like Bitcoin, the only narrative it has is, this very like, simple one, which is like Bitcoin scarce,
Like that reminds me of the utilities bearish thing. There's too much utility for ETH, and I'll take this as an opportunity to move into our last segment, which is the pasta of the week, because I have quite a relevant pasta.
I'm the judge, right?
You're the judge. I'll kick off with my pasta. So yeah, we had a little FUD from Bankless. Utilities bearish. So maybe you can play this clip, Justin.
That we trade back and forth, but I think you're already seeing the seeds of how this can work in the opposite direction. Like have you heard of Puff?
Mm-hmm.
So I'm pretty sure Puff is like doing the kind of, this is going to be like a real project. We're actually going to start it with the meme, and we're going to use the attention to funnel the people into the real product. Like we're going to use that attention for good. And I think we're going to see memes like
Puff is a
like
meme
that.
coin on Mantle.
Yes.
And it's being like bootstrapped by like the Mantle community, the Mantle thought leaders, people like Jordy. And then the idea is like that actually will turn into something with a team with good intentions, with a North Star, and they will build something, but they're starting with a meme first, is what you're saying.
Yeah.
Yo, Percocet, Miley Percocet, Miley Percocet.
Don't let anybody start saying you have utility when you're trying to get this unlimited, upside, no bounds to the stars. So
everything comes back to the Silicon Valley episode. I always reference this. It's like revenue is bearish. If you have like $1 million of revenue, you're the 10x dog. If you have zero, you have unlimited upside potential.
What? Revenue? No revenue. I'll call you back. Why would you go after revenue?
Because to make money?
No. If you show revenue, people will ask how much, and it will never be enough. The company that was the 100xer, the 1000xer becomes the 2x dog. But if you have no revenue, you can say you're pre-revenue. You're a potential pure play. It's not about how much you earn. It's about what you're worth. And who's worth the most? Companies that lose money.
I just thought that mainly the goal of companies is to make money.
Yeah, no. That's not how it works.
Unless the revenue is really good, like, ETH or something, and then it's like, it's working. How about you, Vicky? What's your pasta?
Whoever intern made that is deserves like a raise.
Yeah, Jordy, are you behind the scenes of all these memes? Like you're the thought leader for Mantle. Who's thinking up the memes?
There's a fantastic video guy. I'm not going to say who it is because I don't want people using him, but there's an incredible video guy. Shout out to my boy.
This is mine. I don't know if you noticed, like Andre, like going off on Twitter he was going off with the Say founder. He was going off with everyone, coming at everyone for subtweeting him. I thought it was just hilarious to see. Like we're seeing like a return of this like evangelist sort of builder, founder, very vocal on Twitter. I think it's good to have like a very vocal, quote unquote, like cult leader and guide the voice and stuff.
I wonder what Robert thinks about these cult, because like Robert is such a, composed chess player,
He's the
and
anti-cult leader.
he's the anti-cult. What do
You
you
could
like,
have been, Robert.
we saw Do Kwon, we're seeing Mert. Like, what do you think about like this type of behavior or just like strategy? I don't know. It's a strategy. I don't know.
Yeah, I mean, it has worked well to build communities, like period, full stop, right? Like, I think some of the best communities that have been built have always started with this like wild evangelist leader, right? For good and bad. And when it's paired with something like really attractive from like a token or economic perspective, like you get even bigger situations, not necessarily good ones. Like Terra is like, you mentioned, it's an amazing example, right? Terra, you had this very compelling person, obviously like a sociopath, but like a very compelling person paired with, a unlimited scale, earn 19% on stable coins project. And it got too big, too fast, and imploded, right? And so like, I don't knock Andre, I don't knock anyone who's like going out to be like, a cult leader, so to speak, because like I think the biggest outcomes and success stories in crypto pretty much all have that as an ingredient.
And you could argue that the two largest projects don't have that. Like, Satoshi kind of just quietly.
Well, there is a cult around Satoshi. No, I mean, like Satoshi is the cult leader of Bitcoin, like period. Like it has that figure, right? Like, and he was crazy active in the beginning, right? He pieced out, but like Satoshi was the like hyper evangelist of Bitcoin.
Here's a question for you, Robert. The most successful projects have the least, let's say, main character-y founders. So we've got Satoshi, we've got Vitalik, we've got you, Stani, Hayden. Like, what's the difference? Why do you think, is there some causation there that the more modest, reserved founders are the ones that build the most innovative things, and then the boisterous ones are just building the new Ponzi's?
Yeah, it's a good question. I mean, I don't have an answer to that. Like, I think like, there's definitely a correlation. You're right. Like for sure there's a correlation. Yeah. It's possible that the people who like to fly close to the sun like to be loud when they do it,
Yeah.
What's your pasta?
Yeah. I'm bringing out the big ones for Robert. I had a couple different entries. I whittled it down to one, and I'm a big
You
fan
always have multiple entries.
I have a second one if you'll allow it, Robert. But if not, this is from...
No, you get one entry.
One entry, okay. This is from the cat. Why would a fly ever land on something like that? Venus flytrap. Like, what fly could be so stupid to land on that? Mice should be ashamed of getting caught in a mousetrap. Like, they're just going to eat some cheese on this, like, metal contraption. And bears, like, they're stepping in this bear trap. How could they be so stupid? And then it's a picture of a human on a computer, a fellow degen. I'm sending 2 Sol to this pre-sale. And I just thought this was so hilarious. Like, we just, every animal just has a little bit better of a mousetrap. And I think crypto and these meme pre-sales are ours.
I would give this first place, but it's an old meme format, and I've seen this exact cartoon probably for years. Yeah, I actually have to give Jordy the award for the best pasta of the week, only because I had seen that exact meme format used going all the way back,
Damn, I should have gone with my other one was good too. Good too.
I mean, play it now. Put it up now.
Okay.
You're disqualified from winning, but like.
I think you might not like this one though because it's also a played out format. So it's, the SEC thinks ETH is a security. See, nobody cares, and that was really how I felt on that day. It's like, oh, just another Tuesday in crypto.
This meme is so funny. I love this format.
Yeah.
Yeah, it's a good one. I agree. I had a lot of friends like buying Ether as like out of animosity. Like they were like, oh, like screw that, like. Buy button.
Robert, like the fact that you say that actually is super interesting. Like my thesis around like all these coins, I've said it before, is that like, things like ETH and Solana, like they're community money. There's like this concept of community money. And actually like when there's an adversary and there's a story and there's something happening, it's better community money. And this is kind of like what you said, like we were all just like waiting for this dead ETH to do something because, people are just knowing it's going to get rejected. But now it's like the firmware comes out like, no, we're gonna fight this.
Totally. Yeah, I agree with you. Like I've seen like so much renewed excitement and energy in like 48 hours. It's crazy.
It's good. We have a perfect villain. Robert, thank you. It's not my math. That's not my math. It's a lot of math. Okay.
We, yeah.
The ETH boys.
I'm in.
We join us, Thicky.
This is our coin. Robert, thanks so much for coming. You know, you're. I respect how you keep level-headed, and you've seen all this stuff before, and it's always good to get perspective from someone that has been there, done that, and sees it all clearly. So thanks so much for joining us.
Thanks for having me on Steady Lads. Yeah,
absolutely.
Thanks, Robert. Always a pleasure. We really respect you for building in the space and staying humble, and wish you the best with Superstate.
Thank you.
Yeah, cool.
Bye, guys.
Thanks so much. See you next time.